just entered a stop order to go short on the DAX. Hopefully about to trigger. Yep, it's triggered. So I'm short the DAX. This is the 1 minute time frame chart on the 23rd of August 2018. And you'll see that the market's been in an uptrend for the last half an hour or so, making higher highs, higher lows all the way through this period here. Just made a slightly lower high, so I'm just keeping my eye on things at the moment. As always, early on in a trade, I'm always keen to get the trade off to a good start. I've got a mental stop just above here. You can see the entry here. So my stop's very tight at this particular stage in the trade, and hopefully looking for a breakdown here. So what we actually got at the top here was we got a higher high with a spike. You see this spike on the top of the high, and then the market tried to push up again here, and it failed to make a new high here, came down, failed to make a high here. So you've got consecutive lower high closes, and then the market put in a big bear bar here. And when we got 1, 2 inside bars following the big bear bar, both below this blue 8 EMA, exponential moving average, then when the market breaks the low of this inside bar, then I'm looking to go short, which is what's actually happened. So important part of the trade, the beginning of the trade, you can see that this trend line is just about being broken now. So hopefully see a move down from here. Last bar was an inside bar, so a breakdown from there would be nice. Got my eye on the stop up here, which would trigger an exit for a loss. Also got my eye on this level here. So when the market gets down here, then I'll expect some kind of reaction if it gets down to this level. And by reaction, I mean it'll probably pause, maybe just pull back straight away, back up to wherever the exponential 8 exponential moving average is at that particular time. That's generally how this market works. So keeping my eye on this particular level here and the reactions at this particular level. But this is a swing trading strategy that I'm running on the DAX at the moment. The volatility in the market is quite low. We're at the second half of August, so low volatility. And so I'm looking for, when I say swing trading strategy, what I'm looking for is I'm looking for 2-to-1 reward to risk on my trades, something like that. And that's what this system that I'm running delivers. And it doesn't deliver it obviously on every trade. It has quite a, for my trades anyway, has quite a low winning percentage, less than 50% wins. But when you get twice your risk as a reward on the trades, then you can afford to have a system that runs at less than 50% win rate. And so, yep, got my eye still on the stop, hopefully going to break down from here, but I've got my eye on this stop here. If the market breaks down from here, then I'll be moving my stop down. Now, with this particular strategy, the way that it works is that you'll be entering somewhere around about here on the strategy, and you'd be exiting around about here on the strategy. So you're always going to get some kind of pullback before the exit. So you don't know whether that's going to be up here, down here, or down here. Could even be up here, of course. But I'll be bringing my stop down as the market comes down here, hopefully, as it is doing now. I'll be bringing my stop down, and therefore at some point in time I'll be locking in some profits. Right, so we're now below this level here, just at and just below this level here. So let's see how the market reacts. The last bar was a big bear bar, and you know, at this particular stage in the trade, do I want to exit for a profit? Yes, I want to press the button to exit and I want to bank my profit. And, you know, uh, I teach beginners, I coach and I teach beginner and less experienced traders. And, you know, when you're a beginner, you see your trade in profit and you want to exit, and it's quite natural. And the thing is that, if you look at the number of times this happens, the chances are this is going to pull back up here now to this exponential moving average at some stage, and it may trigger an exit. And I know that I could have exited down here, and so, you know, that's just the way this particular trading strategy works. More often than not, the market will pull back slightly and it will come down again, and it's because that happens more often than not, that it's worthwhile seeing what happens. You can see on this move up, the market didn't go straight up, it went up, down, and every trend has pullbacks in it. And for this particular strategy, it's how far the pullback comes that's important. If it goes past a certain level, then I'll be exiting, and if it doesn't quite make that level, then I'll be staying in the trade. But what I'll be doing is I'll be moving my stop accordingly. So if we look at this uptrend, the market, let's say you entered your trade here, the market came down, didn't quite make that level, and then moved up. When it moves past this level and it breaks up and makes new highs, then it makes sense to move your stop up. Let's say your original stop was down here, move it up, place it below the new low, place it below the new low. So the market makes new highs, place your stop below the new low. Market makes new highs, place your stop below the low. So that's basically how this particular strategy works. At this point in time, we've had a breakdown, and so my mental stop at this particular stage is probably still up here. Maybe I could bring it down below here. But the other factor in this particular trade is that we've got a round number level here, which is 12,400 on this particular occasion. And round numbers are important in trading. You can see that the market stalled here at that round number level, and then it broke through. And quite often when a market stalls like that, then breaks through the round number and then fails at the round number and comes down below it, then it's the institutions forcing the prices up, taking out the protective stops from the traders who were short in here, who were expecting the market to go down. They take out their protective stops, which are all just above the round number level, and then they send the market lower. And this is what I'm hoping is going to happen here. So this is called a failure test trade, if you like. And so you never know with trading, you never know what's going to happen. But basically, you're looking at statistics. Over a long period of time, over 100 trades, if you take the same trades time and again, then are they profitable? If they are, then you've got a valid system. And I've thoroughly tested this system that I'm running. I know that it works, and so I follow my rules. Sometimes on a trade, the rules that I follow work, and other times they don't. But more often than not, they do, and that's why I stick to my system. Beginner traders and experienced traders they'll tend to adjust their system according to what they see happening with the price candlestick bars. So, let's say you get down here, you're 10 points in profit, and the system says, stay in. Your brain's saying, get out, get your profit, take your profit, and they'll exit. And so it might work out for one particular situation. If the market comes back up here now and I make a loss on this trade, then I'd definitely, for this trade I'd have been better getting out. But I know over a long period of time, over a large number of trades, that I'd be better staying in, which is why I'm staying in at this particular time. So back at that level again now, back at the important level, and waiting to see what happens. We had an inside bar here, so this is this bare bar here, spike on top, spike on the bottom, followed by a bar that had a lower high and a higher low. So it's an inside bar, and it's just broken the low of that bar at the moment, which is a good sign. So I'm just hoping that the market takes a nice plunge down here now, and then I can put my protective stop a little bit lower down and at least lock in some profits, but not yet. At the moment, it's like the market's on the edge of a waterfall. If it can just break down here, then we'll be in the money. But as it stands at the moment, we're like a twig stuck behind a rock. We can't get out. So we got the reaction that I was expecting at this level. The market came down to this low here, and it's kind of stuck there at the moment, looking as though it's going to go down, but we'll have to wait and see. We've got high, lower high, lower high, lower high, lower high, all on these bars here. It's tracking the 8 exponential moving average down at this particular stage. That bar was an inside bar as well, so that this was the mother bar, high, low, and then we got a lower high, higher low. So inside this bar's inside that one, and so we've got a higher high on this particular candlestick bar now. So that's not a good sign. And the reason it's not a good sign is because although the market's going down, it means the fact that it made a newer high means that the bulls are getting stronger. So I've placed a protective stop there now. So there's my protective stop, entry here, protective stop there. So I'm going to make a profit on this trade, although a small one, even if my protective stop is hit. There you go. That's my stop hit. So profitable trade, and the chances are now that the market's going to come down and make a lower low, and hopefully it'll offer me another opportunity. But if it doesn't and it goes back up, then I'm happy that I've at least banked some profits and had a successful trade. Okay, I'm short again on the DAX. The last trade was ended up here, and as I suspected, the market came down. So just triggered my stop here, and so I got out, and the market's come down again. No, I didn't get a signal within here to go short again, sadly, but we're short again now. So market pulled back here, and then we've got an inside bar here. This particular candlestick, this doji candlestick here, had a big spike on it, closed lower, still inside sort of a mother bar, big mother bull bar, followed by an inside bar and another inside bar. And as we broke the low of this particular doji candlestick, then I've gone short. The rationale for this particular trade is just the same as the previous trade. We're now in a downtrend, and the price action is the volatility is not particularly great on the market at the moment, and you can see that it's quite choppy. We're getting red bar, green bar, red bar, green bar sequences, and although we're getting that, it's also we're tending to find that it's following the trend nicely. So higher high, lower high, higher high, lower high. That's the uptrend, and we've got a low which is lower than this particular low, the last low in the uptrend, which is a great sign. So the market came down here, made a lower low than this low, and then it made a high, and it's come down, and this is the lower high. So it's now in a downtrend, and the market's breaking down now, which is great. So this was my trigger bar here. Protective stop, mental stop at this stage is just above here, and I'm looking for 2 to 1, 3 to 1 reward to risk on this particular trade. And you see, at this particular stage, entry here, stop here, so we're at about 1 to 1 risk to reward at the moment. So I'm looking for 2 to 1, 3 to 1 risk to reward, but again, this is the way these particular trades work. You'll get into the trade maybe here, and you'll exit the trade maybe here. So you have to wait for the market to give you a sign before you exit with this particular strategy. The only way that I would get out of this particular strategy for a profit without seeing the market turn against me is if I was in profit by say 40 points, then happy days, I'm happy to take my profit at that particular level. The chances are by then it's well into, 4, 5 to 1 reward to risk. So I'll take my profit then. But until it reaches that level, I'm going to stay in. The most number of points that I've had with this particular trading strategy is, I think it's about 80 points. So on the DAX, so it's well worthwhile staying in these particular trades for as long as the signal that took you into the trade remains. So good breakdown at this particular stage. Good breakdown. Just looking at 10 points profit nearly at this stage. And at the bottom of this bar here, probably just reached 2 to 1 reward to risk. But it's a swing trading strategy, this. For these type of market conditions, this type of strategy works best. I've tested, back tested, till I gave myself a headache over several days, several weeks, several months. And I know that this particular system that I'm running now, the way that I'm managing my trades, I know that it works best in the climate that the market's in at the moment. It won't, as I said before, it won't work best in every trade, but over a number of trades, this is the system that does work best. Tried and tested. So the market's just breaking back up again now. Not far enough to trigger any of my stops at this particular stage. Stops still up here. As I said on the previous video, nice big breakdown here. Temptation is you're at 2 to 1 reward to risk. Temptation is to get out of the trade, press that exit button. But when you're in that situation, where do you do it? I mean, you may feel like exiting the trade there, and then you definitely feel like exiting the trade when you're down there. Nice profit. Now we're creeping up here, almost back to break even. Just placed my protective stop a little bit lower now, given the price action that we're getting. 3 consecutive bull bars. Don't want to see it take me out for a loss at this stage. So I've got my protective stop here. You see this dotted dashed line here, entry here, stop there now. So slight profit. I'm just playing around with my protective stop at the moment to make sure that we don't get triggered out by just having a little spike in the market. But I'm going to be out about break even, probably pay the spread, something like that, if the market comes out, which the spread 1 point with IG on the DAX. So just have a bit of 1 point, just under 1 point loss if the market takes me out at that level. But as we did on the uptrend, we're getting the same sort of price action on the downtrend. Market's making lower highs, lower low, lower high, lower low, lower high. Hopefully going to break down and make another lower low now. Quite actively moving my stop throughout this trade. You see that I moved it down again now. So it's resting now just above these 1, 2, 3 highs here. So if the market goes up now, takes me out, that'll be break even or just better. And so it makes you feel quite relaxed when the trade's back at the trades. You know, you can't lose on a trade here. You can just relax and enjoy it. Made a lower low now. Just put in a little spike, so I'm hoping that this bar is going to be red. A red bear bar. The fact that it made a lower low is a good sign. Just means that the downtrend's continuing. When the market's trending like this, you'll have noticed from my videos, from the videos that I've put up before and from this video, it reacts to these exponential moving averages. You have the red ones, the 20, blue ones, the 8 exponential moving average, and when it reaches these averages, these are like produces a value channel almost in between these averages, and when it gets in this channel and you've got a good value on and a market's going down, when it reaches the value level, then the institutions will sell again, hoping for lower lows. Supply and demand, that's all that trading is. An interaction between supply and demand. Okay, so this particular bar had a slightly higher high. Nothing to worry about at this particular stage, but because of that, I've moved my protective stop down. So if the market goes up here, I'm out. The fact that the market stopped just below the 8 exponential moving, the close on this just below the 8 exponential moving average, just giving it a little bit more room to move now. There's my stop now, so it's closer to break even than it was on the last candlestick. Don't want to be caught out by a little spike up now. Back at the level now where I'm thinking, looks like it could be a good point to exit, but I'm hanging on. I'm going to stick to my system. Okay, and that's why I'm going to stick to my system, because we're in a downtrend and the market's making lower lows. But the likelihood is, at some stage, one of these pullbacks, one of these moves back up to the averages is going to go too far and it's going to take me out. But it could go right down here before it actually does that. So, you know, if I was trigger happy, I'd have been out here. Nearly did get out here. But you've got to give yourself the chance in trading. You've got to give yourself the chance, got to give the market a chance to breathe, and you've got to take advantages of trending markets. When the market's in a trend, then you have to take advantage of the trend. You'll have heard the phrase "trend is your friend." Well, it is. You've got to be looking at systems that provide you with a good risk to reward and good probability. And when the market's trending, then the probability is good that the trend will continue. And when I originally got into this trade, it wasn't, not this particular trade, but the one before it, it wasn't trend. The market was trending in the other direction. But I know the way these institutions work, and we were at a round number and the failure test trade was on, but we're now trending down, and we're just riding the trend at this particular stage. Low volatility, as I said today, this gap here is 5 points, and therefore each one of these bars is, the average true range, average bar size is probably something like 4 or 5 points. 5 points. Usually, the average true range, the average bar sizes at this time of day is about 8 points, so it's lower than average. So in its zigzag, the zigzag of price action, it's just making its way back to the exponential moving average again now. I won't be making any decisions, definite decisions, until the end of the bar. There we go. And so there, I've brought my protective stop down now to just above this level here. So there we go. If the market goes up there, then I shall be out, and it'll be a profit. And the profit will be about 2 to 1, and that, hopefully it's going to go down, but that'll be the way these particular trades work. That's how you get 2 to 1 reward to risk. You have to sit. You have to sit through the pullbacks if you're looking to get good reward to risk. And your reward for sitting through, your reward for sitting through that pullback was a lower low. The reward for sitting through that pullback is a lower low, and we're out. So we're out for a profit. There's around about 10, 12 point profit on that particular trade. So I'm happy with that. And that's the value of sticking to this particular system. So further to the 2 trades that I took yesterday, took a couple of trades this morning which I didn't record, but I did record screenshots of, which I think illustrate the system that I've been using really well. You can see here that I had on this particular trade, this is 8.50 this morning, I had an entry here and I went long, and I had a losing trade before that in this mess here on the open, just around about 8.15. I took a trade and the market went up and down and stuck in a range here, and I had a losing trade. I went short, had a losing trade in there, and it was a loser of about 7 or 8 points, something like that. And you can see following that, this is the 12,400 level from yesterday, making an impact again. We had a big breakout long of that level this morning. You could see it bouncing up to the level here, bounce up to the level here, and it eventually forced its way through. And of course, when the market does that, it bounces around. You get a lot of stop orders over the top of these highs here, and when those stop orders give way and the market breaks through them, then it sends the market soaring off. And so my trade this morning got a signal down here in these bars here, and the market zoomed off. And so, as I said in my videos yesterday, the aim of this particular strategy, it's a swing trading strategy, tight stop below these lows here, and I need to let the market work for me with these particular trades. So I will accept the market coming back on the expectation, the hope that the market then makes another move in the same direction. And on this occasion, it did just that. And as I took this screenshot here, the market was just peaking at this level, and I was 43 points in credit at this particular stage. I think I got out around about 37, 38 points on that particular trade. So I let the market come back a little bit, and I got out. So that was an excellent trade. And then about half an hour later, we had this trade here. So the market, this was the previous trade going up. Market then made a lower high, so high here, lower high, and broke down, started breaking down. Didn't take any trade in here, but I then got my entry after following this bar here. I got an entry down here, and I got an entry to go short. And again, with this particular trade, I felt like exiting here for a profit. I just had a good winner on this one. I was easily in profit for the day, and the market came down to this level here, and I was thinking, I really feel like getting out, but my system tells me to stay in, so I stayed in. And again, as the screenshot's taken, we're on 41 points profit on this particular trade. The market came down a little bit and then started going up, and I got out, and that one was a 40-point profit. So that's what swing trading's all about. I don't swing trade all the time. Not all of my trades are swing trades, but when the market is in the conditions that it's in at the moment, we're in August, low volatility, then this particular strategy that I'm running works best. I've time tested it, and it works best out of the systems that I use, which is why I use it, and I stick to it to the letter of the system. And that's how to be successful as a trader. That's how to be consistently profitable. So if you're developing your own systems, if you're developing your own trading, if you're interested in learning to trade, then I'm a coach and I'm a trainer of traders, and I'd love to help you develop as a trader. So give me a shout if you're interested in working with me. And we also have some training courses, forex and a day trading training course, in which I talk to you about the strategies that I use to be profitable on the market and to trade the markets. So if you're interested in any of that, then give me a shout out or visit us at excellenceassured.com, and I'd be delighted to work with you. So my name's Anthony Bidsall. Hope you enjoyed the video, and I'll catch you on the next one. Bye for now.